नमस्ते। हर संडे की तरह आज भी आपके साथ जुड़ चुका हूँ। हमारे साथ रिजर्व बैंक के एक CGM काले सर है और पिछले
नमस्ते।
एपिसोड में हमने उनसे जियोपॉलिटिक्स, geoeconomics, general banking, international events impact and all such things we discussed on last Sunday. Today we'll be focusing only on the urban cooperative banks, its issues and what and what not. There are several questions which I'll be asking to him. We will have his perspectives and would like to be guided by his advice for the entire sector. हम जानते हैं कि काले सर काफ़ी सालों तक 4 या 5 दशक तक बैंकिंग रेगुलेटर रहे हैं। विशेषतः अर्बन कोऑपरेटिव बैंक्स में उन्हें विशेष रुचि है क्योंकि उस विभाग में उन्होंने जब वो RBI में थे तब काम किया है। और इसी सिलसिले में सर हमारे चैनल पे आने के लिए बहुत बहुत धन्यवाद।
मेरा सौभाग्य है।
So the very first question, a simple question which I would like to ask you is, why do you think that UCBs are failing in general in the country? What could be the cause of it?
I can't readily say what is the reason for failure, but what I generally gather about what is happening in and around us can be put in two very widely used words, and that trust deficit.
Okay.
So, have we all kinds of banks, not just UCBs, all kinds of banks? Suppose you were to take away the government ownership from a public sector bank, would you still believe that the people would bank with them in the same volume and in the same manner as they are doing today? So the ownership matters a lot. And secondly, the geography. For a commercial bank, scheduled commercial bank, which is extending all the way from Kamakhya to Kutch and from Srinagar to Thiruvananthapuram, what will be the geographic impact of certain things happening in one branch or one location or one state? It won't impact them much.
Yeah.
Whereas urban cooperative banks are concentrated in a few pockets. And secondly, when certain things happen to a given bank, people don't remember the names. People remember the character of the ownership of the bank. And that is, if this can happen to this cooperative bank, it can happen to this cooperative bank as well. So it is more a cause and effect relationship because of the sector in which you are. There's nothing wrong with it, because if you look at it, the growth of cooperative sector banks, despite the number of banks going down, the growth has been there.
Growth has been there.
It is not that there is no growth. The number of banks has almost come down by 1,000 in the last 10 years. But that 1,000 doesn't mean that the business base of the urban cooperative banks has been eroded to that extent. In fact, it has been gained and gained more. So in fact, the slice of the cake for you has increased in a way. And secondly, again, I had spoken to you last time also. This time also I'll reiterate that point. You consider your market share with reference to the geography in which you are present. Don't compare it with the all India numbers.
Right.
If you are strong in 5 states, compare the position of your banks vis-a-vis commercial banks in those 5 states. Don't compare it with the all India banks position. This is the deposit, this is the advances, this is the business mix.
That's a mistake the sector has been doing.
That is wrong. In fact, that's why you are sending out the wrong signal.
Yeah.
And that's why people tend to feel you are a negligible entity within the sector. But if you look at the savings patterns, you take the states of Maharashtra and Gujarat.
Yeah.
The UCBs have definitely impacted the saving patterns behavior in these 2 states. The contribution of savers going to urban cooperative banks is much more and more spontaneous than it would be with other banks.
Very true.
Just these 2 states are an example.
Yeah.
So UCBs need not lose heart. They have not lost anything. If at all, they have everything to gain by focusing not just on the quality of customer care, but on the trust factor. People have come to you because of trust. People trusted the management, people trusted the board, and that's why the people came to you.
Yeah.
So you need to sustain that trust and remove the trust deficit, if any, by more effective engagement with the stakeholders.
Very true. Sir, if I look at the 2 events which have occurred within a period of 5 or 6 years, one was of PMC going down, and this year in February, the New India Cooperative Bank. The major difference which I find in the events of PMC and New India Cooperative Bank, there were fraudulent elements within those banks, so let's not talk about that. But when PMC happened, there was a contagion. But with New India Cooperative Bank, there was no such contagion effect, despite the fact that they had some 30 odd banks and 3,000 crore deposit business, so on and so forth. People have started realizing, and Reserve Bank of India took a very bold step of granting 25,000 rupees withdrawal within a period of fortnight. That was reviewed and given immediately. Normally, the DICC grants the 98% coverage, almost 98% of the deposits are covered. It's only the 2% depositors that get protracted benefits after the process of liquidation. Uh, do you feel that things have changed or the public perception has changed about the cooperative banks? There is a little shade improvement in this.
What has changed? What has changed is the ability of these banks to be able to promise the depositor that instead of so much money, so much more money is safe.
Mm-hmm.
So earlier, what was when the DICC came into being, 30,000 was the claim cover.
Yeah.
It went up to 1 lakh. On the back of the Arsan scheme, went up to 2 lakhs. Today it is 5 lakhs. So whether that increase in the protection limit is matched by my increase in trust,
Okay.
that is a crucial question to be asked.
Gradually moving towards this is what can be construed.
It can be construed, but the point is, you said 98%, let me correct it. The percentage of deposits covered 100% in terms of the accounts is not more than 65%. Still there are 35% people holding more than 5 lakhs.
Correct.
So if the 65% are the ones who are holding below 5 lakhs, for them it is a question of either I have everything or I have nothing. Because they put their entire life savings. And why they put it with the urban cooperative bank? Nearness, knowing the people, getting the money when they want it, getting a loan against the deposit when they want it. So all these were the proximity issues that made them favorites with the people, common people.
Given the situation, is there a possibility of Reserve Bank and Government of India jointly increasing the insurance cover for the senior citizens?
How can you do it only for the senior citizens? See, there can be.
That's a talk which has been happening.
It has been happening. But the point is, can there be so many issues that can be taken care of for the senior citizens? Not just the depositor protection issue. Because if you take care of the depositor protection issue, today it's at 5 lakhs. What is the per capita income of the country? So can you unilaterally increase it, and what is the segment of the population that's going to be impacted? Today it is 5% senior citizens.
Yeah.
Tomorrow it goes up to 10%, and in a matter of years it may go up to something like Japan, more than 20%. So will you be, if you do it as a law today, will you be able to sustain it for a lifetime in the future?
Right.
That is a question. Instead of that, I'd rather focus on the government coming out with a legislation purely for taking care of the benefits of the senior citizens, both in terms of general protection and specific protection.
There is one offbeat question. There has been a lot of talk about the artificial intelligence in banking, and when I think of this with reference to urban cooperative banks, I shudder to think of it for the simple reason urban cooperative banks have been very sluggish in terms of transforming technology. Now, with the technology revolution that is coming up by way of artificial intelligence or whatever the improved technology, the urban cooperative banks are not finding it easy to migrate. Do you think this will be a huge negative impact on the urban cooperative banks?
It will not be negative. Ultimately, what artificial intelligence is about, it is contextualization of data. It is gathering of customer behavior. It is a gathering of customer experience based on how he or she has behaved in the past. So, does it guarantee that you are going to behave the same way in the future?
It doesn't.
Like you go to the ATM today, it will tell you based on your last 5 transactions. Do you want to withdraw 2,500? Do you want to withdraw 5,000? Do you want to withdraw 10,000? Suppose some person says none of the above. I want to withdraw 3,500. Will the system not allow it?
It will.
It will allow. So artificial intelligence is nothing but a program. So what you want out of it, and why you are so much worried about artificial intelligence, because the supervisor has migrated his system to a system based on artificial intelligence. So the outputs that you are going to get from your core banking solution, they need to match that output which the supervisor is looking at. So don't worry too much about artificial intelligence as a business support system.
A lot of Hawa is being made about that. There are a lot of
Hawa in the sense, for what reason?
They want to make money, obviously.
No, apart from that, if today you want to have somebody superior in terms of skill sets and a knowledge based mind, superior to an artificial intelligence tool or a program, you need to pay that much higher. So if I pay somebody today 20 lakhs, I'm going to say this is a job which was being done by 4 or 5 people. So are you going to be able to do away with those 4 or 5 people and compensate this fellow? So that is a call which you have got to take. It is nothing great, because ultimately all the programs and solutions, they are all based on what you want out of the program, what outcome you are looking for. Like initially there was a lot of problem when the RBI told all the UCBs that we want your system generated NPAs. So that came through. Now if they say we want your system generated provision requirements, what is wrong in it? It is the same thing, is it not? If your system generated NPAs, you should also be able to collate it with the amount of provision required for an individual account. And if you put that in the context of the revision of guidelines in the BDDR recently, which the RBI said below the line and above the line, you will get it to know. So you need not make general provision. You are going to make specific provision, and that provision is based on what your artificial intelligence or core banking solution tool tells you. This is a substandard asset, this is a non-performing asset, you need to provide so much. So you have to be very clear what you want out of the system. It is only a decision support system, it is not a decision making system. So let's be clear on that.
Sir, 2025 is again being celebrated as International Year of Cooperatives. Back in 2012, there was one logo which was issued by United Nations that cooperatives are the best business models. Do you really think so? Because if they are the best business models, they should not be failing, they should be growing. But they are not growing on an average, not even double digit, they are growing.
See, the point is cooperation is more of a culture, it is not a business. It has to grow as a culture first. Today, if you ask people why cooperatives have succeeded in Gujarat and Maharashtra and Karnataka, it has to do something with the culture of the people. Why they haven't grown so much in West Bengal or Chhattisgarh or Bihar? Again, a matter of culture. Because ultimately, what is the thinking philosophy both of the cooperative sector or the government in West Bengal? There's nothing belonging to me, everything belongs to the state. One for all for one. In cooperative bank, what do we say? In cooperative institutions, no profit, no loss. So the ideology is the same, but it has to form the basis for your cultural activities. So banking is one of the activities.
Right.
So culturally, you have to first bring so many other activities that are there. Like typically in Maharashtra or Gujarat, why cooperation succeeded? First is milk revolution. Second is housing sector. And that's why people have tasted the essence and success of cooperative structure as a organization. As a business organization, second stage. First as an organization. All for one for all. So when they've tasted the success, when the sugar industry flourished in Maharashtra, when the dairies flourished in Gujarat, when the housing societies flourished in Maharashtra and Gujarat and Karnataka, that gave a confidence to the people that this is a model that can work.
Okay.
Contrast that with the equity model, share capital model. How many people are invested in that? Okay, you are able to encash your gains. But after that, what? Here, the organization is permanent. People may come and go. The organization is permanent. Like you have some society saying we are 100-year-old. Shardashram Society in Mumbai is more than 100 years old. The oldest.
There are more than 150 and 200 banks which are more than 100 years old.
That's what. So why they have succeeded for 100 years? Why they have survived for 100 years? There was a trust factor. So trust has become a part of their culture. So every cooperative bank must try to imbibe that culture of trust in them.
One of these years, during our discussions, you had referred one point as to why the boards of these banks are not looking at certain policies from the angle of depositors protection, or what they have done for the depositors protection. as a bank. Should there be any guideline on persistent actions on depositors protection?
Whether it is a depositor or shareholder, director representing the borrowers, anybody for that matter. Depositor protection is the ultimate cornerstone against which your performance is judged. Even the Reserve Bank supervisory effort looks at what is the percentage of deposit erosion or non-erosion.
Yeah.
So if that is the case, how do you build in the trust? Communication. You have to have robust communication with all the stakeholders. And you have to come out and say, this is the thing we have done. This is the right. Don't try to hide facts from people, because people have multiple channels of information.
Very true.
If people don't get it from you, they know how to get it, and then ask you a counter question whether this is true. And when ultimately it reaches a boiling point stage, and the Reserve Bank comes and intervenes, it is only the board of directors which will end up cutting a sorry figure.
Yeah. Very true.
So instead of that, why not be proactive and tell the depositors or all the stakeholders, this is what has happened, this is what is at stake.
No, if you are transparent, that they believe you, they trust you. I mean,
why not? See, I'll tell you the classic case. Look at Janata Sahakari Bank Pune. 15 years no dividend. Did any shareholder withdraw?
In fact, their shares grew during that period.
No. So it's a trust factor that these people will not do anything wrong willfully. It is like what Modi ji often says. नीति बराबर नहीं हो सकती है, लेकिन नियत साफ है. The same thing here. Your policy could be wrong, but not your principles.
Right.
If your principles and your trust factor are absolutely clear,
correct,
you are able to handle even the policy mistakes by way of perfect communication.
On this background, do you really feel that the government of India or the state government or the Reserve Bank of India have done enough for the growth of the sector, or do you find any areas where these regulatory bodies need to be more responsive or more proactive?
See, when you say urban cooperative banks, typically when you say urban cooperative banks, where are they located? Hardly any of them is prospering in urban areas. Most of them are in semi-urban and in small towns. So, if that is your domain, why not request the RBI to take the other entities away from there? If you are calling a small finance bank, why can't you reserve that area of financing for small finance banks? Why you want everyone to come and do small financing? So you have to fight it out with the RBI to get your domain reservation.
So that's a level playing field that can be granted by the regulator.
Why not? You have to approach the regulator through the government, not the RBI directly.
Sir, it was after tremendous pressure the priority sector norms were recently relaxed. Otherwise, they were putting a kind of stifling situation for the growth of the urban.
See, I'll tell you, priority up to a given stage.
Yeah.
After that, once your national objectives are met, lending itself becomes a priority.
Precisely. Why we are not doing away with the priority sector lending?
See, that is a government policy in terms of national requirements. Of if credit is provided more to these particular sectors, they'll help in generating more growth, more employment. That is the priority. So agriculture is a priority. MSME is a priority. Now, once these reach saturation levels, then lending itself becomes a priority, and that's going to happen sooner than later. So priority sector as a concept will no more be relevant, because lending itself will become a priority.
Sir, one of the key or critical areas in terms of the contagion effect was felt vigorously when PMC Bank went down. It had some 800 small banks and societies who had kept their deposits with the PMC, and suddenly the door was shut, and then these banks were made to provide. Typically, one argument was made during that period was this was an interbank exposure. Being an interbank exposure, and PMC Bank then was a scheduled bank, and even the license was not then cancelled, and subsequently it was transferred to Unity Small Finance Bank. There's a lot of legal things which have happened, but the sufferers were the smaller urban cooperative banks by way of provisioning.
Point, if I am a cooperative bank, if I am going to put my money with a cooperative bank, I'll ask the same question. Is it susceptible to the same dangers to which I am susceptible?
The smaller banks don't have that ability to understand.
They have the ability to understand. In fact, it should be easier for them to understand that I'm safer being away from another cooperative. What levers you see? Earlier, if you remember, your veteran bank, you remember, even urban cooperative banks, it was mandatory on them to maintain their CRR with the district or the state apex banks.
True.
Why? Because they were the apex level organizations vested with the power of inspecting these banks also.
That was after the
before 66. No, before 66.
Yeah.
When the AACS happened.
Yeah.
BR Act AACS happened 1st April 1960. It was before that. Why was that? Because the trust factor. Government also trusted these organizations without any bounds and without any limits. But the happenings of the events after that brought out a different aspect of the cooperative banking segment, and especially after 1998, when the prudential norms became applicable to the cooperative bank segment. Till that time, it was all free for all. We were not under any prudential regulatory regime. From 1998 onwards, all the UCBs and all the cooperative banks came under the regulatory regime. So once you came under that regulatory regime, exposure management and exposure to the type of institutions you have becomes your responsibility.
True.
So every board should decide, if I am a cooperative, how much more money I'll put with another cooperative, higher or bigger. And that had to happen because PMC. Why the followed contagion? Because the big borrowers that were there behind the happenings or mishaps in the PMC were also having exposure to other banks, which has never come into the discussion forum.
Sir, recently, rather 6 months ago, the supervisory action framework norms were replaced by prompt corrective action. And prompt corrective action framework was very accurately defined. I mean, I still say that the difference between SAP and PCA was that in PCA your offenses were defined and punishment comparable with that offenses are defined in that circle itself. In SAP, there were some subjective elements where Reserve Bank used to review and decide whether to continue in the SAP or not. With more than 500 banks going under PCA, there is a threat for the sector itself, because who knows what happens, because the prompt corrective action is virtually at the drop of the hand. थोड़ा प्रॉफिट नहीं हो गया 2 साल, कुछ ये हो गया, थोड़ा तुम्हारा नेट इनके बढ़ गया, you are getting killed. How the urban cooperative bank we should look at this situation?
See, prompt corrective action is nothing new. It is old.
Yeah, it is old. For commercial bank, it was there.
It is very old.
Yeah.
In fact, if you look at the chronology of events, first what we had in urban cooperative banks in 2005 and 6 was the GSA, graded supervisory action, based on whatever grade you achieve.
Very true. Very true.
After that, we moved to SIF.
Right.
In between, we had the guidelines for sound and financially well managed banks.
So that came prior to that, there were camels also.
Camels also was there, supervisory rating also was there, A, B, C, D. No prompt corrective action. Prompt corrective action, you look at the three elements, they are all interdependent. Capital adequacy, gross NPA, and profitability. They impact each other.
Yeah, very true.
So if there is a time frame given to you, what you can only request is that time frame should be flexible in terms of you being able to achieve the goals. You cannot say I want to be away from PCA. You will be under PCA. Like if your gross NPAs are higher, that question may not arise in the going forward in the future, because all your provisions are going to be linked to actual NPAs. It is not that you are going to make a blanket provision like BDDR and provide for it, because whatever surplus is there, you are going to get a right back to the tier 1 capital. You are going to get the benefit of that in tier 1. And there is a substantial benefit. By allowing it in tier 1, what the RBI is telling you, it is your money, it is your capital. So, going forward, what is your burden? Your burden is only identifying the NPAs accurately, making provision for them.
So, what is hurting is this. There were banks which were under SAP for years together, 8 years, 9 years, 10 years. There were at least 100 odd banks which were under SAP for a certain number of years. In PCA, that's not going to be the story. within 2 or 3 years you will be pushed to go for amalgamation if situations don't improve.
Not just urban cooperative banks. Very big public sector banks were also put under PCA with all the restrictions. If you go through the history of PCA, it's available in the domain in the RBI website. Banks like Indian Bank, Allahabad Bank,
UCO Bank was also
UCO
there.
Bank, they were all put under PCA.
But the owner was different.
Even if the owner is there, think of capital being poured into these banks out of public funds. It is a budgetary process. It doesn't come. It doesn't come free.
Yeah.
And it has to come with the approval of the parliament.
Right.
Whereas here it is easier for you because your cushion and your legroom is very small. So your flexibility becomes that much more easy for you to operate with.
Mm-hmm.
So rather than looking at bigger targets, so I think it is a manageable exercise. You need not be worried about it. If there is a likelihood that you may not be able to achieve it, you can tell the regulator for these reasons you have not been able to achieve.
So that flexibility still will remain.
Will always remain.
But you have to show signs of improvement.
You have to show that you are making efforts. All the efforts may not result in the desired outcomes. Sometimes the efforts may be less, outcome may be more. Sometimes the efforts may be more, outcome may be less. Not to be disheartened. You have to make efforts. And for that, the commitment of the board is the highest thing that is required. The board must be committed to achieve that.
Sir, recently the Banking Regulation Act was amended, and where the tenure of the directors was prescribed as 10 years. The 8 years provision was already there for years together, but for commercial banks, it was made 6 years by 2019 guidelines of Reserve Bank of India. Here, the notification, I mean, the BR Act amendment has come that a director of a cooperative bank cannot be a director for more than 2 years.
More than 2 years or 10 years?
10 years.
10 years. Huh.
We are all waiting for the guidelines of Reserve Bank of India, because there are several thoughts which are occurring in the industry. If I take a cooling period of 1 year, will that 10 year will go? This is not the case in commercial banks.
See, I'll tell you. Typically, it is the total period you are as a director.
In lifetime.
In lifetime.
Correct.
Okay. So whether you take a cooling period or no cooling period, the moment you complete 10 years,
you are out.
You are out. So here the best thing for the industry to do is I have a proper succession plan both for the top management. If you have a retirement plan for employees, have a rotation plan for the directors also. Start with, I remember when you were in Kalanjanta, you had started the process of having 1/3 directors replaced, having this change, anticipated change in mind. So that has to be the practical, viable solution found by the banks themselves. Because law is uniform for all. You cannot go and challenge it in a court of law and give flimsy reasons. Because again, the institutions are permanent in nature, not the individuals.
But then, do you really feel that this is going to affect the skill sets of the board of directors, because the experienced people would no longer be there on the board?
See, in fact, they're continuing on the board for unlimited and infinite period.
No, that is true.
No, ensure that skill sets are not built.
Yeah, that is
so here is binding on you. I can give you an example of one bank wherein the bank's board has now told that the concerned committee, the board member who is the chairman of that committee will make the presentation in front of the board, not the CEO or the head of the department. So it can be audit committee, it can be IT committee, it can be building committee. So you have to build the skill set among the directors, and there's no dearth of skilled people, qualified people coming. In fact, the younger generation is more qualified. They have to be made knowledgeable and wise by integrating them with the cultural aspects of the board and the organization.